Thank you. Good morning. I'm Ed. This is Lucas. We work for a company called Nubank, which is a credit card issuer based in Brazil. And this morning we wanted to talk to you about a decision we made to build something in-house that may be somewhat unconventional, which is called Our Money, Our Rulebook. So the topic is double entry accounting. So before everyone groans, it's just 15 minutes. We're not going to go too deep, but double entry accounting is kind of the original fintech, I guess. This is ancient stuff. It's ubiquitous. It's used everywhere. And we think it may not be used quite enough. I'm
a software developer, and last year Ed told me that we're building accounting, and so I Googled it, and as you can see, it's depressing. And no fun at all, but we come to see that accounting is a really powerful tool if you work in a fintech company. It's something you want to do.
Yeah, so fun or not, these are useful abstractions. And so we decided to build a double entry accounting system in-house from scratch. And we want to explain, I'll explain a bit kind of why and what, and then Lucas will go into the architecture and a bit of how. So debits and credits, everyone remembers, goes into a general ledger. Out of the ledger comes financial statements and views over this data that are very useful for analyzing companies, but also analyzing individual customers, right? You can think of every customer as having their own balance sheet, and you can use the same techniques. We'll focus on the balance sheet today, although all of these things are kind of possible from a ledger system. And for those who don't remember, balance sheet balances, on the left-hand side, you have assets. On the right-hand side, you have liabilities and equity. So we're going to use this type of a balance sheet visualization throughout the presentation. One of the things we set out to do when building this in-house was to maximize granularity. So outsourced systems, kind of ERP, is useful for certain things, but not for really high granularity things that are very tightly coupled to your specific domain. So the first axis we tried to maximize was time. So instead of a monthly kind of aggregation, it's a real-time balance sheet system. We also tried to maximize granularity along the segmentation. So instead of looking at aggregates, we're looking at individual customer accounts. And also along the general ledger account granularity. So we're extending financial-only accounts to things that are off-balance sheet, operational, analytical, things you wouldn't normally see in an accounting system. And our scope here is specifically core customer operations, not kind of tax and payroll and CapEx and all the other things that roll up into kind of audited financials. And our goal here was to enable new use cases, right? If you think of a traditional accounting department with accountants consolidating things from spreadsheets on a monthly basis, the kind of executive team is usually the audience, potentially auditors. This is a kind of a slow cycle time, periodic kind of review of this information. If you were to try to make that more granular and more kind of rapid in terms of cycle time, you'd start to reach kind of resource constraints. You'd have to make a big accounting team. You'd have a lot of people kind of pulling numbers, and clearly it starts to look silly, right? You're gonna do this in software. So what we did was we wrote a closure service, 3,000 lines of closure, a bunch of tests, and this gives us the possibility of doing real-time per account operational accounting with kind of new audiences like customers, employees, other services, things like that. And so this was kind of two engineers over the course of 3 months, and we built an accounting system. So Lucas will walk you through the architecture.
So the first thing that allows us to do this is a database called Datomic that keeps, it doesn't store just the data, it also stores the modifications you did on the data. So we know exactly when the data changed and all the change history of the data. And the second timeline we have here is the timeline of the accounting events. So we have, for example, if I make a purchase now, I have an event that's due for now. But when I receive a payment, this payment may be done like 3-4 days ago. So the relevant date here is 4 days ago, not now that we discovered it. So we have these two timelines. One keep tracking of what we knew at the time, so we can know what was the truth at the day we closed the bill for the customer. But we also know now what's the truth now that has all the events for that customer. And as we track the events and what we want to show to the users are the balances, we also have a layer of caching involved here. So we cache the sum of the events. So the balance sheet is the final numbers here. And to see how this event string looks like for a single customer, we show here a simple visualization here. The top line is a timeline of events. Here we can see the entries. The entry consists in a debit account, a credit account, and an amount. In this case, I'm moving some limits, so $15,000 here for limits for this card that I just issued. And this big square is the balance sheet. So the bluish colors are the assets, the reddish colors are the liabilities, and we will see some green, that's the equity part of the balance sheet. And these events are triggered by Kafka messages. Kafka is a technology as a message broker that's idempotent. So these events are idempotent. We can consume it at any times we want, but there's only one effect here. And each event corresponds to one accounting movement. And this movement can spawn multiple entries. For example, this card issue movement has 2 entries, okay? And these movements also carry the provenance, so we know when the movement happened, who are the user that triggered the event, and so on. And this entry is balanced by the design. We don't have a way to lose money in between. And before saving to the database, we run some pre-checks to guarantee that these entries won't violate any invariant, not just this is balanced, but also business invariants, okay? And we check this against a database snapshot, and to keep off concurrence, we serialize the events for a single account, so we only consume one event per account at a time, but we have multiple partitions, so we can handle multiple accounts at the same time. And as soon as we consume the event, we invalidate the cache from that moment on, so we can keep this. And continue with the events here, we can see when the guy makes a purchase, we have now something to bill and something to pay the merchants. And when we continue, we close the first bill. Now we have the closed account there. We still have to pay the merchant, and the user owes us something now. And let's assume that the user now pays only half of their bill, or only a part of their bill. Now we can see that this user is late. We can see that on the balance sheet. And since he didn't pay it all, we can issue some interest. That's the small green part there. And we get some equity. And if the user pays in full, now we can see that the only thing left is the cash the user gave us, and the things that the cash we need to pay the merchant. So this we can see how a single customer moves. And to get a better sense of it, this is a visualization on this big square is the whole company, the whole Nubank. And we divide it in three axes here. The first one are the first line is for different customers, individual customer. The second row is cut by due date, the date of the month the user has to pay their bill. And the last one is the cohort, the account creation cohort, so the month the account was created. If you see the middle row, we can see the billing cycle. So the closed account, then the settle accounts, it moves through the month. This is the timeline of the events here, from January 2015 till today. And we can see the behavior of individual customers here if you would like to. And we can see the behavior of cohorts by time, for account creation time. So we can see if the behavior of the users are changing through time also. So if the users we booked last year are different than the users we are booking now. So Here we can get a sense of movement here. This is just a data visualization of the balance sheets. But imagine you building a data science model that look at this data at this level of granularity, at this aggregation level. And you can build models to predict anything you want. You can build models to forecast things. So that's the much power you get from this double entry accounting.
So to echo that, we have found a few different use cases inside of Nubank for this, and it's gone from being something we launched without. We launched with a system that stored a list of transactions. Now that we've made a double entry accounting system with kind of quality controls and pre-checks and post-checks and things like that, it's become quite indispensable. So financial accounting is the easy one. So this is our system of record for customer level balances. We will consolidate this information into the ERP system for higher level financial accounting. Reporting in the financial industry is often kind of one of the harrowing experiences, either from kind of debt financing, covenants, or regulatory with the government. And so actually most of the ratios and the reporting that we need to do, at least in Brazil, becomes a function of an aggregation over the double entry accounts. So it actually kind of simplifies future reporting requirements. Also for management accounting, in terms of kind of driving the car, keeping the car on the road, are we making good choices day to day? Looking at delinquency tables, aging by cohorts, revenue per customer, receivables, actually has a very good kind of operational use case, and it really only works if you've got data that's fresh and real time. Another thing is we're detecting operational mistakes or bugs in the system based on balances and things that kind of don't make sense. So the same type of financial ratio and financial analysis can be applied to specific accounts and to kind of aggregates of accounts. And the last but not least, the image here is what we're showing our customers, right? So this is an individual customer balance sheet. This is a limit bar that they know kind of how much limit they have available, what's going to be on the current bill, what's going to come on future bills for installments and things like that. So what do we like about this system, and why would we recommend something like this for other people with similar use cases? For one, it's declarative. So when we say rule book, we mean we've made a list of the rules, and the rules define kind of the physics of our universe. And so when events happen, we react to those events according to those rules. And the rules are extensible. So the software is generic, but adding more rules means you can add more financial products. So we're already extending this internally to cover rewards accounting or kind of debt financing accounting. The other thing that we can do is, as I mentioned, financial analysis on any level of aggregation, looking for negative balances, weird ratios, things that kind of don't smell right, and that can be a sign of bugs or operational issues to dig deeper.
And by defining this invariance, this business invariance, we make sure that we don't save bad data on the disk, and we can detect bad data that's coming from other services. So we can detect real bugs using that. We also use a technique called generative testing. We generate a random sample of events and try to break those invariants. And if we can break those invariants, it means that there is a bug in the code and we need to fix it. So with these two things, we have a system that's correct. Doesn't mean that we don't make mistakes. If we find a mistake, as we have the whole stream of events stored on the database, we can simply replay the history of a single account, of multiple accounts, and rebuild the balance sheet for them. Rebuild the whole accounting for them. And how, as we have the data per customer, it's easily shardable. We can shard per customer with no real pain because the data is already at that level.
So if there's kind of one takeaway from our experience, it's that, you know, I wouldn't assume that accounting is something that you outsource, because there's different types of accounting, and some of it can be quite useful. And if you have a financial relationship with a customer, consider building one of these that really fits your domain. So Lucas and I will be out at the booth if anybody has questions. Thank you.